Oh, I'm excited about the next, say, decade, more than that, who knows? But the technological innovation that we do is unique to the United States. We take risk, we allow failure, and something good always pops out of it. And so AI right now,
Right.
the latest lingo is AI is inflationary. Well, no, it's not. It's improving productivity. It's going to improve profitability, and it's going to create jobs.
Years ago at C.J. Lawrence, working at ISI with Mr. Hyman, you used to write with a quill. You dip the quill into the pen.
Yep.
Now we've got all this social media. I would suggest that the modern social technology is amplifying the suffering out there, even as we have respect for real suffering that's going on.
I'm not sure there's suffering from technological innovation. I started with a typewriter, not a quill, but I did quickly go to a computer, and the increase in personal productivity, corporate productivity was tremendous. There was destruction associated with it. There always is. But at the end of the day, we're unique when it comes to our ability to improve productivity. I've traveled around the world over the past 6 weeks, excuse me, and people are really envious of what has been able to go on in the United States. American exceptionalism isn't dead. It's still very much alive and well.
How about inflation in this country? So
Yeah.
we do have, I'm just looking at the retail gasoline prices, about $4.32, down from, $4.50, $4.60. How much is inflation a concern of you at the moment?
It's not actually.
Okay.
We wrote this weekend that we think inflation is peaking. As you know, oil is down from 115, WTI from roughly 115 to 90-ish. Gasoline prices are probably peaking. Who knows where that's going, obviously geopolitically. But then under the hood, the core PCE deflator was up only 0.2%. Within it, you've got some bifurcations. Services are grinding a little higher. Some of the tech prices are also moving higher, but goods prices are slowing down, if not stalling out, if not actually declining. Tariffs are coming down. Walmart, as I mentioned earlier this morning, Walmart said they're going to use these tariff refunds to lower prices. We really have too many retailers out there, too many retailers that really can't compete for that consumer dollar. Reminds me of in the old days we got rid of Sears, Kmart. Because they weren't competitive. And I think we're going through the same thing today. You've got a group of retailers that are winning because they can be competitive, focusing on productivity, better priced products for their consumers. And then you have a whole bunch of retailers who really can't compete.
Yep.
We're probably going to see a shrinkage in the retail space over the next several years.
Kevin Warsh, you've got the job you wanted. You've got presumably some guidance from your president. But boy, the data doesn't suggest that you do much right here. What do you think this Fed's going to do here?
Oh, the key for the United States, and we had our mistake back in the late 60s and 70s, that the Fed must maintain its independence. And I think everybody involved understands that. The bond market will, rear its head if that's not the case, and so be very counterproductive. We saw that in 1969 with William McChesney Martin, where he acquiesced to President Johnson unwillingly, but he did. Mm-hmm. Bond yields soared, and the Fed then had to step up because inflation was a problem. You don't have the inflation ingredients today that you had back in the 60s and 70s.
The foundation of the Orszag, Posen call for higher rates, so far they look like geniuses, is not a wage spiral, but a lift in wages due to inflation. Are you observing that? Are you observing a nominal wage lift?
Not yet. Wage inflation, we're still early cycle when it comes to
Agreed.
the labor market.
I think Peter and Adam would agree with you on that.
And it takes time for wages to reaccelerate. But over the next 5 years, I will be very bullish on not just nominal wage gains, but real wage gains. That's what a productivity tech cycle does. It raises profit margins, and you lower inflation, and you raise real wages. And so I think you have to differentiate between nominal and real. We've seen this. We saw it under Reagan. We saw it under Clinton, and I think we're going to see it. We started to see it last cycle, and I think we're going to see it. You have to stay focused on real wages. So I would agree we don't need a lower interest rate environment. I correlate nominal GDP with interest rates all the time, and nominal GDP is 5.5, 6. And you don't need lower interest rates. Look where we are, despite the fact that we've stopped cutting interest rates. But then it's also important to remember the Fed did cut rates 175 basis points. It takes 1 to 3 years for that to work its way through the system. I've got incredible fiscal support to the tune of 2% of GDP. Obviously, incentives to invest, tariffs, and then tax cuts for the consumer and corporations. But I've got enough stimulus to keep things going, and I've got an incredibly productive private sector.
AI, what does it mean for the labor market? Torsten Slok is out with a note today saying, it creates jobs. It's not going to destroy jobs. How do you think about that?
I mean, I've been on that theme forever. I mean, I've lived it in my career. I've seen it in my career. That's what makes the United States unique, that we allow creative destruction. So yes, you will destroy some jobs. Always happens when you have new technology, and you will create new jobs, which you always have when you improve productivity and profitability and have high corporate profit margins. Europe doesn't have that. Japan didn't have that in the 90s.
Yeah, Europe, I mean, they missed tech, just broadly defined.
Yeah.
It seems like they're going to miss AI broadly defined. I'm just shocked at that. I mean, it just...
Well, the government policies aren't conducive for, and the culture isn't conducive to risk, innovation, and supporting profit margins.
We're going to go here, but your first comment is vital. We allow failure.
Yeah.
Will we see, what will be the character of failure in AI?
As we saw under the internet in the 1990s, you threw a bunch of companies in the mix, and you ended up with much fewer.
And different, like combinations taken at a huge loss, transactions, actual bankruptcies.
It's for sure. I mean, every news cycle you saw it during the automotive age. You've seen it historically in this country. But again, that's what makes us unique.